market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, a pretty bold gamble by the Japanese Prime Minister has paid off in spectacular fashion, with Sanae Takaichi securing the biggest ever parliamentary majority for any post-war leader in Japan. It's an extraordinary reversal of fortunes for the Liberal Democrat Party, which lost control of both houses of parliament just 7 months ago. Well, joining us now is Alice French, Bloomberg's Japan stocks reporter. Alice, thank you so much for joining us. And we're all glued to the screens yesterday. When it comes to domestic fiscal policy, what is Takaichi likely to do with this big win, and how fast will she do it?
Morning. Yes, I mean, what a showing for Takaichi. I think she really kind of beat a lot of people's expectations with that huge majority. And of course, you know, we know that that she will be pushing ahead with these fiscal expansionary policies. She's been focusing on things like AI. Defense is a big topic for her, and I think really the sky is the limit here in terms of, you know, she has such a huge majority in Parliament. She will no longer have to listen to those opposition parties in terms of their calls for tax cuts and things like that. Now, having said that, in part of, you know, as part of her election campaign, she was she had been promising that she's going to cut the tax on food temporarily. Now, that had caused some kind of worries in the bond market in the lead up to this election. You know, we know that she is actually about to start speaking here in Tokyo, and so the market will be looking for signs of sort of fiscal responsibility from her, right?
Yeah, and she actually has started a couple of minutes ago, and that's exactly true. Markets want to know what she's going to do fiscally. I mean, there's also some constitutional reform that's back on the table. But what are the markets now factoring in?
Yeah, I mean, the reaction today has been interesting, right? We saw the Nikkei and the topics, those stock benchmarks, really rallying today. You know, the Nikkei up around 4%, up a new high, crossing that 57,000 mark at one point. And this is all kind of expectations that she's going to be pumping more money into those key industries, whether it be AI, quantum computing, defense, construction, infrastructure as well, set to benefit. But of course, the outlook for sort of bonds and the yen slightly less clear. As I said before, you know, she has sort of been part of triggering bond sell-offs in the past. The yen has also been weakening, you know, close to that kind of 158, 159 to the dollar level, which is sort of the danger zone for intervention. And we know that sort of in the days leading up to the election, she had spoken about the benefits of the weak yen for exporters here. And so I think, you know, the bonds and the yen are really going to be reflecting that caution. I think today the initial reaction has just been, look, we have a stable government, you know, back in power. She has this really strong mandate. She can push forward with those spending plans. Now I think what's going to matter is how will she actually fund all this? How many tax cuts are actually going to come into play? Will there have to be extra bond issuance? And I think the bond market and the yen is going to be stricter on that side than the stock market.
Alice, thanks so much. Alice French there, Bloomberg's Japan stocks reporter. Again, the Japanese Prime Minister, after her big majority win, actually started speaking a couple of minutes ago. She's saying she got strong backing from the public to pursue her policies. We'll look out for any detail coming out of Tokyo. Now, Bloomberg understands that the Chinese regulators have advised financial institutions to rein in their holding of U.S. treasuries over concerns of concentration and market volatility. Well, with us now, Sylvia Westall, Bloomberg's managing editor for FX and rates in EMEA and the US, and Eric Lonergan, head of discretionary macro at Calibrate Partners. Eric, Sylvia, thank you both for joining us. Eric, let's start off with you. I know you have an interesting play on actually German bonds as a way to hedge on AI. But actually, I mean, is this the start of a sell-off in US assets?
I think no. I mean, I think, you know, if you think of what drives U.S. bond markets, and you've seen that over the last weeks and months, is a combination of things. It's predominantly U.S. domestic interest rate expectations. I think, you know, if China is to impact the exchange rate by telling its institutions to sell U.S. assets, we've seen the renminbi's been strengthening pretty persistently against the dollar. I think Americans would be very happy for that to continue. I mean, whether China can cope with a stronger currency, you know, is another question. There's still a shortfall of domestic demand. There's still domestic deflation. You know, it is still predominantly an export-led economy. So structurally, that hasn't really changed. If you said to, you know, to America, or you looked at it as in terms of the two major geographies, and you said the Chinese currency is going to go up against the dollar, nobody's really bothered. The big call for U.S. bonds is what happens to U.S. interest rates.
Right. Of course, as always.
As always, yeah.
But we have, Sylvia, I mean, we've tried to understand whether there was a kind of underlying current of U.S. assets being sold off because of the politics. So even if in the shorter term it's not influencing treasuries as much as Kevin Warsh, are we seeing the foundations of something shifting?
Well, I think the timing is interesting because we have seen this sort of shift away or diversification from other countries. You have India and Brazil. We have had China buying less. But I think in the overall picture, we did see treasuries dip on the news, although there is kind of the markets digesting everything that's happening with Japan as well. I would say that, there are a few sort of to-be-sures here. The first is that when you look at the latest data for overseas holdings of treasuries from November, they were at their highest on record. So people are, holding, foreign countries are holding US assets. It might just be different countries. You had sort of Norway and Canada and Saudi Arabia offsetting some of those others. And overall, it was a really good year for treasuries last year. It was a good year to hold treasuries. They did well, compared to their peers. So I think there is sort of a longer-term picture here that it builds into, and there's the timing of it. But overall, there are other factors kind of feeding into this.
Yeah, I guess it's a gold play.
In what sense? I
mean, if you see a shift from central banks away from U.S. assets, then they buy gold, which is why we've seen the rise, notwithstanding the massive fall that we saw last week.
100%. I mean, the only problem with the gold hypothesis is this kind of, the debasement theory is usually that you've got an inflation problem. However, the evidence is actually that inflation's coming down. I mean, I think what's happening really with gold to me is speculative, and then you have kind of you backfill a narrative about central bank behaviour. Right. But broadly speaking, it's just a trend, and as we've seen, it's become a highly speculative trend reflected in the elevated volatility.
So, Eric, I'm quite intrigued. German bonds, the best AI hedge. So if you feel like there's an AI bubble, buy German bonds. Well,
I think we are in an AI bubble, but one's got to be very clear what you mean by that. I mean, to me, a bubble, this does not mean AI stocks are overvalued or the stock market is overvalued. What it really means is that asset prices are hijacking social activity, right? And so a bubble is a social, psychological phenomenon. I mean, it changes behavior. And everybody's talking about AI.
That actually a bubble is what you get fired for not owning.
I mean, there's some truth in that. But what I mean is stock prices are changing behavior. And what you're seeing is, because we haven't seen this before, you get extraordinary volatility in asset prices. You get a very significant compression in people's time horizons. Everybody becomes myopic. So if you look at asset price behavior, rising prices and rising volatility in stock markets, that is typical, really, of a bubble-like environment. And I think that's the environment that you are in. And I think, I think, for me running a macro hedge fund, I want to have exposure to AI because I think there is going to be extraordinary price volatility in the next 12, 18 months.
But you can be in a bubble that never bursts. So when are you expecting for something to come down? Yeah,
well, I think you will get ferocious volatility within it, right? So what you've already seen this year. So suddenly Korean stocks, no one's interested in them in the middle of last year. Then all of a sudden people think, oh, wow, actually there's AI exposure. They go up 70% in 6 months. You saw that with Google in the second half of last year. You're seeing the reverse of that with software, which is profound fear. So all of a sudden people go, oh, there hasn't been a change to earnings forecast, but we don't know if these businesses are going to survive. Within the debris of the software sector, there will be huge opportunities, right? To me, the bond market, I think one of the really big calls is the other dimension of an equity bubble. And the most interesting phase is when it starts to impact the economy. And the big call now is, what does it mean for interest rates? And this is where Kevin Warsh is key, because he is...
Always.
He's the Greenspan, right? He thinks this means not just higher growth rate, but lower interest rates. And that will completely de-anchor valuations. But that has profound implications for the bond market. I think European bonds, particularly as you go 10s, look extremely attractive. You've got a very steep curve. You've got a lot of term premium. You've got a central bank that's more powerful than any country in Europe. So talk about central bank independence. Arguably the ECB is kind of last man standing.
Let's also talk about the UK. So the UK, we're seeing so much pressure, actually, on Keir Starmer. His future seems to be in the balance, although there's no clear way of Labour actually, changing him if he doesn't step down. What kind of impact can we see on markets?
Sure. So we saw kind of some of the pressure into gilts on February the 5th, so last week when these sort of this idea started swirling. Often you find that the gilt market moves quite fast and then the politics catches up a little bit. So we saw that there. So I think, the thing that the bond market's really looking for is this idea of these fiscal plans that the UK has, and they're very much tied to sort of Starmer-Reeves doing that together. The expectation would be that if Starmer were to go, probably she would too. And what does that mean for that kind of plan there? So who would come next? Would they stick to those fiscal rules that have been sort of so important in that balance and that kind of understanding there between the bond market and politics? And overall, the one that's very clear is the pound. Very bearish bets on the pound from hedge funds. It's been down. You've had the dovish BOE. So overall, we're going to come into a period of, more pound weakness and to come. So I think, question marks there for the bond market, and then the pound is really kind of down from here.
And Sylvia, your take on Japan, because we're still hearing actually from the Prime Minister, the big question is fiscal.
Exactly. Well, I think Takaichi did discuss and brought about this idea of bringing in fiscal responsibility. And for now, again, we haven't seen a huge move on Japanese government bonds right now. I think perhaps people are taking that in their stride. There's lots going on. I guess, we've seen some auctions. They kind of had up and downs. They've had some kind of good Japanese bond auctions. The question mark is about whether there'll be more issuance to come. I think it's been very much a market that's been sort of quite reactive and seeing where things are going. But right now, for now, they're giving her some time to put her programme in place.
Eric, going back to the Fed, what do you expect Kevin Warsh to actually do? Because, does he have to get market credibility first and foremost? And does he change? It's my understanding that actually he will change the way he views the U.S. economy through the lens of AI.
I think you're absolutely right. Both of those points are key. This is there's no other job like this in the world, right, where trillions of dollars of capital are moving on every word that you speak. What's far more important than doing what you're told by the White House is getting it right. And if the market either senses you have to establish market credibility, there have been episodes and market events whenever the Fed chairman has transitioned. But I think you're absolutely right. I think what he will first of all do is change the narrative. And this is where kind of the availability bias will play a role. If you get Fed staff to do a whole load of research into AI, you will convince the FOMC that it matters more than they believed beforehand, right? And so I think that is going to become center stage of the debate. And that, will precede violent asset price volatility. Right. If we really start to believe that this means lower interest rates and higher terminal growth rate, how do you value the stock market? That is when you get the really, really severe price volatility.
With spillovers to countries like the UK, that although the Bank of England will push back, they're still linked to what the Fed does.
Yeah, well, the UK is fascinating for all the reasons that you've given. I'm actually not worried about medium-term fiscal policy because I actually think there's a huge political consensus that's terrified by the gilt market. So I think even post-Starmer, I suspect you'll get tight fiscal policy in the UK or prudent fiscal policy. You will get volatility in between. But the other thing that nobody talks about in the UK is the UK has the biggest share of professional services in employment. It's got a huge legal sector, it's got a huge accounting sector, it's got huge consulting, it's got financial services. So in terms of the private sector exposure to AI, when policy has pushed up the cost of labour. So the incentive for the private sector to replace labour with technology is very elevated. So I think, the UK is in a really, really interesting juncture where part of the distribution is big decline in interest rates and very considerable asset price volatility.
Thank you both for joining us. Bloomberg, Sylvia Westall and Eric Lonergan, head of discretionary macro at Calibrate Partners. Coming up, the EU has issued a warning to Meta over its policies around AI assistance on WhatsApp. We'll be speaking to the European Competition Commissioner, Teresa Ribera, next. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, we have quite a lot going on. Let's look at a market check to give you exactly the latest. A lot of focus, of course, on the fact that China has urged banks to curb U.S. Treasuries exposure. This not because they say they worry about U.S. creditworthiness, but because of market risk. Now, Meta has been hit by an EU warning over policies that block the use of rival AI assistants on WhatsApp. Well, Oliver Crook, Bloomberg's chief Europe correspondent, President, is with me here in London. Before we go to the Munich Security Conference, let's also get more on the story with Teresa Ribera, the European Competition Commissioner, who joins us from Brussels. Thank you, EVP, for joining us. There's quite a lot going on when it comes to tech and when it comes to Europe. We'll talk about Meta in a second, but what kind of, how are you expected to be received by the US, given everything that President Trump has said about Europe slamming tech?
Well, I think that it is very obvious that we need to defend and to implement, to enforce our rules, to defend the market, a well-functioning market, a competitive market, where there can be an option for players to provide their offers and for consumers to decide which option they prefer. So the abuse of a dominant position in a given market that prevents any other alternative for final users is not good news for anyone. And it is not good news in Europe. It is not good news in the United States. And in this case, we are worried because we sense that this may be the case when forbidding the access of other providers of AI instruments that use WhatsApp. So this is the message that we wanted to send to Meta. Why we do not start thinking of an interim measure preventing this stop of available options.
Yeah. Commissioner, when you're saying that Meta risks a temporary European Union ban, how do you think the US will react to it?
I think that for anyone being at the forefront of any institution, we respect the enforcement of the law. So I don't know how it may be read by any government, but my sense is that this is not connected to politics, but connected to well-functioning markets and protection of consumers.
I'm not sure the Trump administration will view it necessarily in exactly the same way, but I want to ask you a more broad question about AI and regulation. Obviously, this is a technology that will disrupt the world in a number of different ways. It's a new sort of area of functioning. Are we going to see more cases like what we're seeing against Meta, against other technology firms? And what kind of concerns are you seeing in terms of concentration and antitrust in the world of AI more broadly?
We are not looking into the origin or the headquarters of any given company. In this announcement that we have made today, these interim measures, Italy has already taken a similar approach. We are opening a procedure so that if Meta does not agree, they can defend, they can take whatever information they bring to the table to respond to our question, and it is not a final decision. I think that AI is changing the world. We all, consumers, citizens, providers of public services, providers of private services, industrials, rely very much on the quick development of digital services and AI. And I think that it is good that there can be many players that could challenge the traditional incumbents. So it's good to be successful, and it is also important to ensure that those looking into the future are not prevented to develop their services because of those that have succeeded in the past. Great to compete, great to have these open markets for everybody.
And in another area that's not quite as new as AI, but still relatively new, is this world of streaming. And we now have this sort of potential acquisition by Netflix of Warner Brothers. This is something that certainly will attract some scrutiny from you. In a sort of preliminary fashion, what kind of concentration risk do you see from those deals? Do you see one of the two offers as more risky? And have you had any contact with any of the CEOs involved?
No, we haven't got any contact, and of course it is quite clear that this is something which is not quite clear yet what it is going to happen. So we follow what it is going on, and we will be paying attention to whatever operation, consolidation, acquisition may take place. For the time being, it is not clear. So the bids are there, the discussions are there. We will have an eye on what it could mean for the European markets, as it is the case in the United States, but there is no operation to be assessed yet now. Not yet, sorry.
Commissioner, could you talk to us also a little bit about Google? So what's your vision for how Google should operate in the EU? And could you ever see a Google that's actually different in the EU than it is to the US?
I think that Google is quite a relevant player both in the United States and the European Union. And I think that in certain markets, in certain services, they have a very relevant position. In others, they are not the front runners. There are others that have taken a higher share of the market. And I think that it is quite important to remind ourselves that we came up with a regulation to introduce predictability on what it is the expectations in terms of the obligations and the rights in an upfront manner, so that any gatekeeper, anyone having a relevant position in a given market could know upfront what it could mean to ensure that users were protected.
Since the last time you spoke to Bloomberg, has your thinking about Google's ad tech changed at all?
Sorry, that I didn't get your question.
What's next for Google? Is there anything in terms of ad tech or something else that you don't like when you look at Google?
Oh, yes. Sorry. I hadn't heard that. No, I think that that is where we are right now. And I know that Google is making effort and having conversations with the services so to ensure that this very important flourishing business case in terms of advertising through the different technological platforms are not restricted or is being biased by any given preference towards Google's decisions, toward Google's priorities or preferences. And the efforts are ongoing. So we have paid attention to the decisions being made in the United States, including by the courts, and I think that it is good that we go along similar lines in the different jurisdictions. But the process is not yet over. So we will be coming up once we have a clear understanding on how far we can ensure that the final solution is equal, inclusive, and does not discriminate competitors.
And so we've dealt a lot with the sort of U.S. side of things. You're also looking at things on the China side of things, subsidies into, for example, wind energy. This is an investigation that you have now launched. If you could give us a little bit more in terms of what you're looking at specifically from China. And this is a criticism, illegal subsidies from China, that we see not just sort of leveled against the wind industry, but across many other industries from a number of people in Europe. Do you expect to have more investigations in order to prevent that sort of dumping into the European market at this very critical moment for European competitiveness?
Yes, this is something that came up last week. We have been working on that for a while already, and we want to clarify and to ensure that we will pay attention to prevent any illegal subsidy that could undermine the level playing field in the European market. Of course, wind is a very powerful way to produce electricity, and it has a huge interest in a modern industrial value chain behind, and we are proud of what it has been done in Europe, complying with high standards both in social and environmental rules and innovation and so on and so on. If anyone wants to enter into the European market, we are more than happy, but it is important to be transparent and not to dump on prices.
Commissioner, as always, thank you so much for your time. Teresa Ribera, the European Competition Commissioner. We'll be back. We'll have plenty more. This is The Pulse. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The gamble pays off. Japan's prime minister secures a supermajority in parliament, making her the country's strongest ever leader in the post-war era. The UK Prime Minister's leadership hangs in the balance despite sacrificing his right-hand man over the controversial appointment of Peter Mandelson. Plus, China calls on its banks to rein in their holdings of US treasuries, citing concerns over concentration risks and market volatility. So the UK Prime Minister Keir Starmer's future hangs in the balance after Morgan McSweeney quits as his chief of staff. That's after a backlash over Peter Mandelson's appointment as UK ambassador to Washington.
Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around number 10 in the run-up to the appointment of Peter Mandelson and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off.
Well, that was Richard Tice, of course, Deputy Leader of Reform UK. Now, for more on all of this, we're joined by our UK government reporter, Joe Mays. Joe, thank you for joining us. You've been following this right from the start. Can Starmer last the week? How will the Prime Minister actually try to shore up his position?
Yeah, it's looking very difficult for him. I mean, tonight he's going to address Labour MPs at the parliamentary Labour Party's weekly meeting, and that will be a pretty crunch moment where he has to convince them that he is still the right person to be in this job, that he has the authority to stay in this job, something that has been quite significantly undermined by the whole Mandelson episode, and the fact that the person who advised on the appointment of Peter Mandelson, Morgan McSweeney, he's resigned, but the person who actually did the appointing has not, and that's the Prime Minister. So there are clearly, knives out for him amongst Labour MPs. He needs some in the cabinet, might be on watch to be potentially telling him he should go. So, the walls are kind of closing in around Keir Starmer here, and he's got a real job in his hands to fight back.
But Joe, I mean, I've been told a couple of times that actually Labour are not as aggressive or as the Tories, and they actually don't have a mechanism to make sure that the PM stands down. So how does this work? Do they wait until there's also this special election later this month, and if he does really badly, then they'll force him out?
I mean, if you're one of the people who wants to be Prime Minister, perhaps someone like an Angela Rayner or a Wes Streeting, you are looking ahead to those moments. Like you mentioned, February 26th, there's special election in Gorton and Denton where Labour is expected to lose. Plus, you have local elections in May where Labour is again expected to suffer heavy losses. And you would have thought that those two events probably would definitely finish Starmer off in terms of enough Labour MPs would want to see a change, and that might be the optimum moment to strike as a rival and try and push him out. And the mechanism is you get 80 Labour MPs to formally nominate you to the Labour governing body, and that would trigger a contest. Now, Starmer might himself just resign of his own accord before that moment. There are different ways it could happen. But yes, there's a reason why here Starmer could remain as like a lame duck Prime Minister until those events happen. But either way, it's looking very, very bad for him.
Joe, as always, thanks so much, and also fantastic reporting from you and the team. Joe Mays there, our UK government reporter. Now, let's see what impact the crisis is having on markets. We're joined by Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, as always, thank you. What's having a bigger impact on the pound? Is it politics or the Bank of England's dovish stance?
Morning, Francine. At the moment, it's definitely all about politics. I mean, we have seen the pound come off about 2% from its peak, just seen a couple of weeks ago, and it looks like it's going to fall another 2 to 3% if these rumors about pressure on Keir Starmer persist, and it looks like he may be ousted from office. I think that, what will add to the tailwind against the pound is the fact that, the Bank of England is willing to cut rates. We saw the Bank of England deliver the most dovish policy outcome in a long time. It was the most dovish statement that we got. So I think that, both are going to collude, both factors are going to collude and keep the pound lower for longer.
So could there be more pressure on the pound if the next leader of Labour is from the left of the party?
I think so, because, if we get the impression that, this political stalemate is going to work at cross purposes for the pound, I think it will weigh on UK assets as well. And definitely we have already seen the reaction in long-ended gilts where the yields are rising. So that is a definite sign that there is a risk premium being embedded into gilts and indeed into UK assets. If you look at Euro GBP, that's pushing up as well to the highest this year. So I think that, if there is a sense that, the next Labour Prime Minister could be someone who is fiscally less conservative and more willing to spend, I think that, that will put the pressure, that will heap up the pressure on the pound.
Then what are you looking out for in the next couple of weeks? I mean, again, if there is some kind of leadership contest or if he gets put down, what's worrying the markets more? Is it fiscal? Is it, is it that the fiscal has an impact on the Bank of England afterwards?
Well, I think in the short term, it's definitely the implications for fiscal that will override what happens with the Bank of England, because the Bank of England has a reaction function that is also predicated on politics. So if there is heightened political uncertainty, they have the wiggle room to defer their decision that may hurt the pound, which i.e. hold off on an interest rate cut. But I think that in the short term, to the extent that there is greater political uncertainty, you will see the 10-year and the 30-year yields bobbing higher, and definitely the bigger asset, the bigger security that will take the hit is the 30-year yield, which we have seen repeatedly in the past couple of years. It's come under pressure because investors are risk averse to holding longer dated gilts in the face of lack of fiscal discipline in the UK.
Ven, thanks so much. Ven Ram there, MLive's cross-asset strategist. Now, oil prices falling as tensions in the Middle East ease after Iran and the U.S. engaged in indirect talks on Friday in Oman. Iran said it agreed with the U.S. to continue these discussions to de-escalate tensions and avert a military confrontation. Now, for more, let's talk to Paul Wallace, Bloomberg's Middle East managing editor. Paul, thank you for joining us. What did the two sides have to say about the outcome of the talks?
Francine, they were both broadly positive about them, both the Iranians and the Americans, and they agreed to hold more talks, which we think will happen late this week, perhaps on Thursday, again in Muscat, the capital of Oman. I think that was the best possible outcome for those who do want a diplomatic deal between the U.S. and Iran, and for U.S. strikes on Iran to be averted. They weren't going to reach a deal in a single day. The issues they're dealing with are too complicated for that. But the fact they basically agreed to talk again, like I said, probably this week, was a positive sign in that sense. And I think that's why we've seen oil prices fall off a bit.
Well, we know that the Israeli Prime Minister Benjamin Netanyahu will visit Washington this Wednesday to meet with President Trump. So how much pressure is he putting on the White House to broaden the scope of these talks beyond Tehran's nuclear program?
Well, I think this is a very interesting visit to Washington from Prime Minister Netanyahu, because it wasn't in his schedule last week. At least we didn't know about it. The Americans still haven't announced it publicly. So it seems to have been, hashed out quite last minute. It seems as if Netanyahu was the one that wanted this. I think there's clearly some concern among the Israelis about a deal per se. They say the Iranians are simply not trustworthy, and that any deal they sign with the Americans, won't be worth the paper it's written on. They're also nervous about any deal that excludes issues such as Iran's support for proxy militias around the Middle East and its ballistic missile programs. Those ballistic missiles are very much a threat to Israel, and they've been fired upon Israel both last year during the 12-day war in June and in 2024. So that is something Israel wants to see discussed. There's certainly some Israeli commentators and officials in government want, they would like something that pushes for regime change in Iran. Whether they'll get that or not is of course unclear, and it'll be up to Donald Trump to decide. But there's certainly still a good chance of U.S. strikes on Iran at some stage, even as these talks between them and between the Americans and Iran seem to make more headway. They could still break down, and in that event, I think, the chances of strikes will be quite high.
Paul, thank you so much. Paul Wallace there, Bloomberg's Middle East managing editor. Now, UniCredit says it plans to return about 50 billion euros to investors over the next 5 years. It follows a 10% rise in fourth quarter profit that beat estimates. The bank has also forecast net revenue to grow at an annual rate of 5%, hitting 13 billion euros by 2028. We'll be speaking to the chief executive, Andrea Orcel, on this program at 9 a.m. London time tomorrow. Now, some of the world's biggest mining industry executives and government ministers are in Cape Town for the annual African Mining Indaba. The event is the continent's biggest such investment conference, with discussion this year focused on critical minerals and their role in Africa's development. Well, Jennifer Zabazaja, Bloomberg's chief Africa correspondent, is also there. Jen, good morning. So how have global tensions over critical minerals changed conversation at this year's Mining Indaba?
Good morning, Fran. I mean, if you take a look at where geopolitical discussions are right now in the conversations that we're having here, they really are the backdrop going into these discussions over the next few days. If you start with the conversations that had been had just a few years ago when I first started coming to Mining Indaba, it was one about extraction and exploration. Now there is really a focus on shared prosperity throughout the whole value chain. So focusing in not just on upstream and exporting raw minerals, but also this focus on how you can capture downstream value, not just for a lot of the developed world and their own idea of critical minerals, but also what does that mean for Africa? So earlier in the morning, I was speaking with the Africa Finance Corporation president and CEO, Samaila Zubairu, who was talking about the opportunity that exists right now, just given a lot of the reframing and the shifting of narratives and alliances globally, and potentially this is the opportunity for African mineral producers to actually step in and have a seat at the table and talk about how can this work integrated regionally throughout the whole entire continent. So a lot of the discussion today and throughout over the next few days is focused then on what are the needs then for a lot of the developed world, what in fact can some of these governments capture as export revenue, but then also how can they focus in on what this looks like for them domestically and also regionally, and how can they use their own mineral resources to develop and industrialize themselves. One of the key focuses, Fran, is this idea that critical minerals potentially looks different in different parts of the world, and potentially instead of saying critical minerals as a blanket term, it should instead be strategic minerals, in fact.
Jen, how do Africa's critical minerals compare with China's? And again, what role can they play in the development of Africa's continent?
Right. Well, Fran, if you take a look at some of the numbers, I was actually just looking at them here. Africa actually hosts $29 trillion in mine site mineral value, but actually they're actually only capturing 8.6 trillion is actually underdeveloped and undeveloped. And a lot of that speaks to really the opportunity that exists here just because of the fragmentation and the lack of data that has existed in the past. But still, the opportunity to be a part of the global value chain and the need for critical minerals more broadly is definitely of the moment. If we take a look at where Africa sits in comparison to China, as you were just alluding to, Fran, there is an opportunity with countries like Angola. There's also opportunities with Zambia, the DRC, which is one of the major producers of cobalt. And of course, we talk about gold. West Africa has quite an opportunity when it comes to capturing some of the value that we're seeing from gold prices right now. But still, what we were speaking about earlier with the Africa Finance Africa Finance Corporation president and CEO is that it's not necessarily that Africa is, in particular, the focus in on rare earths, right? But there is still an opportunity to focus in on some of the other minerals that could potentially be a part of the whole entire value chain, not just for the industrialization of the developed world, again, but potentially of some of these African economies. So still could be a major player long term. And so there really is a focus not just on what is it that other countries need, but how can this be a long-term play? How can they be a part of the development of this moving forward?
Jen, thank you so much. Jennifer Zabazaja, there, Bloomberg's chief Africa correspondent. And Jen will be speaking to some great guests throughout the event, including Robert Friedland, the Ivanhoe Mines founder, a little bit later on this morning. Now, the Hong Kong pro-democracy activist Jimmy Lai says he has been sentenced to 20 years in prison for collusion and sedition. It's the harshest sentence to be given under the national security law imposed by Beijing in 2020, and is effectively a life sentence for the 78-year-old. Lai is a UK citizen, and the UK Foreign Secretary has described it as a politically motivated prosecution. Coming up, what next for Japan following Sanae Takaichi's landslide election victory? We'll dive into the conversation with a professor of Japan's international relations from the University of Sheffield. That's next, and this is Bloomberg.
Takaichi is unbelievably pro-business. She is going to build national champions. She's going to mobilize more public resources to actually build industrial champions in Japan.
So Takaichi, in fact, although she does have this very powerful new majority in the lower house, still faces some quite daunting problems in trying to help Japan overcome a long period of deflation, which now has turned into a period of pretty dramatic inflation.
Her very large supermajority victory ensures that there's at least stability and consistency in her economic policy going forward, and you're not going to see these constant wavering policies.
Just some of the guests we've had on Bloomberg TV reacting to the Japanese Prime Minister's landslide election victory. Now, we also just had that press conference. Despite the extraordinary nature of the appointment, the nature of her victory, that was a pretty by-the-books press conference. She largely reiterated her policy pledges without too much detail, but also reiterated the need to cooperate with opposition parties despite their overwhelming defeat. Now, we're joined by Hugo Dobson, professor of Japan's international relations at the University of Sheffield. Professor, thank you for joining us. What are you expecting the Prime Minister, after this pretty incredible victory, to do for Japan?
Good morning, Francine. I think first and foremost, we should probably take stock of this extraordinary victory that you just referred to. Let's appreciate the scale of this. It's historic. It really goes beyond the interests of Japanese election nerds like myself. She surpassed her mentor, Abe Shinzo, who managed to secure 294 seats. She surpassed the LDP's record of 300 seats in 1986. She's basically delivered its largest ever victory and really sort of breathed life into a party that 2 years ago really seemed to be on the ropes. It was breaking apart. Its factions were moving away from each other and disbanding. It had lost its majority in both houses. People were talking about the end of the LDP. Well, Takaichi personally has sort of led it back to a position of not wholly dominance, I would say, but it's definitely in a strong position so Takaichi can progress with her domestic and international agenda. I'm sure she is probably feeling a sense of pride, a sense of vindication, and a sense of relief. She called a snap election a strategy that was often used by her predecessor, and she's delivered on it.
But, Professor, what does it mean? So if you look at foreign policy or domestically, where do you think she makes a bigger difference?
So I think in terms of domestic agenda, as some of your experts said previously, she's going to provide that stability that's been lacking in Japanese politics since Prime Minister Abe resigned. She's going to be able to pursue her agenda of tax cuts and stimulus. Markets are responding positively to this. The yen has strengthened, but the devil is going to be in the detail. Clarity is going to be required on how these stimulus packages are going to be funded. So there's still work to do there. So that suggests that she can forge ahead, but there's still going to be battles to be fought and compromises to be made. So I think generally speaking, we can see that, yes, she's in a strong position, but she will have to work with the opposition parties, as she has mentioned already. Remember, she may have a dominant position within the lower house, but she still lacks overall majority in the upper house, which could be circumnavigated through the two-thirds majority in the lower house, but isn't likely to be approached in that way and will require her to work with opposition parties.
I mean, Professor, it's very clear that this feels like it's around her personality and her policy, rather than her policy orientation. So I know many people are describing this as the kind of presidentialization of the parliamentary system. On fiscal policy, what can we actually expect from her? I know there's a lot of concerns about overspending or how she wants to put state-led investments in areas critical to long-term strategy and security at the heart of her policy.
So, as you said, Francine, at the outset, this does appear to be the presidentialization of Japanese politics, which is something that's been happening for a while. I think we can understand this victory in the election as we can with any election. It's partly the weakness of the opposition parties, but it's also the strength of Takaichi. And it seems to me that she's sort of combining the strengths of two former prime ministers. Your viewers will probably remember Prime Minister Koizumi, who definitely played the popular card and seemed to have some kind of infinite aura that went down very well with voters. So she's tapping into that. She's providing a bit of colour in Japanese politics, which, quite frankly, can be quite a drab, grey world. But she's also combining it with ideology and policy from her mentor, Abe Shinzo. And she'll carry on some of that ideological position that Abe has followed. In terms of what we can expect fiscally, as I say, the devil will be in the detail, but we can see a slight move away from her mentor's position of Abenomics with her not putting so much emphasis on structural reform as Prime Minister Abe did. Instead, she's trying to look for areas where investment can lead Japan in new industries like AI, or possibly including defense industries within her economic strategies.
Yeah. Does this almost force the Bank of Japan's hands to avoid rapid tightening?
I would think so. I think we'll see this play out over the next few weeks. I don't think we're going to see a huge change immediately. It's going to be a process of negotiation. So although the headlines may look like this provides a carte blanche, if you like, I think it's going to be a much more incremental approach.
I know there's been, again, she was very cautious in that press conference talking about China. Is this the trickiest of relationships, or is it Japan-US?
I would say the US relationship is always the trickiest for Japan. It's the central relationship for Japan. And again, Takaichi can take a leaf out of Abe Shinzo's playbook here. He positioned himself as sort of Trump whisperer number one, if you like. He exploited the interpersonal relationship. He got as close to Trump as possible and tried to influence him that way. And I think you can see that Takaichi is doing something similar. Trump did come out before the election and endorse her, which is rare, if not unheard of, in Japanese politics for a US president to take a position. So I think she's in a good position to double down on Abe's approach. As regards balancing against China, that will obviously be the other major concern. But I think, again, you're going to see continuity. You're going to see Japan trying to sort of balance against China by exploiting its relationships in Southeast Asia, where similar concerns exist as regards China. And you're also going to see strengthened bilateral relationships beyond the core bilateral relationship with the US. So already Japan is collaborating with its G7 partners like the UK and Italy on defence cooperation, and also with regional partners like Australia as well. This is all part of a long-standing continuum in Japanese foreign policy. So I don't think Takaichi's landslide election is going to represent a huge sea change. I think we're just going to see more of the same.
Thank you so much, Professor Hugo Dobson there, Professor of Japan's International Relations at the University of Sheffield. Up next, it's, of course, Bloomberg Brief. They have a full roundup of what's happening in the markets. Now, I'm looking at treasuries. I'm also looking at yen, given what we had in Japan. The other thing we're looking out for is, of course, Starmer's UK premiership seems to be teetering on the brink as one of his key aides has quit. But treasury slipping, the dollar falling. Again, this comes as Chinese regulators are calling on banks to scale down holdings of U.S. government debt. So we'll have a full roundup shortly, and this is Bloomberg.